What you're telling me is that music is about to stop, and we're going to be left holding the biggest bag of odorous excrement ever assembled in the history of capitalism. 1974, 1987, 92, 97, 2000, and whatever we want to call this. It's all just the same thing over and over. We can't help ourselves.
I say when we sell. Hey, I say when we sell.
All right. If you are a fan of The Last Trade, you're going to love this episode. I really enjoyed our conversation with David Thayer, one of my favorite guests and one of my favorite conversations of the year. I'll go out and say it. So I know you're going to like this one. Discuss a number of things: market sentiment, is AI a bubble, the macro shift that's currently underway, Texas buying Bitcoin, JP Morgan launching structured products, and a number of other things that I'm sure I'll forget. If you're celebrating, I hope you had a great Thanksgiving. Enjoy the weekend, and appreciate you tuning in to The Last Trade. All right, we are back. We're having some audio issues. I think we've worked through it. I'm talking at a very high volume right now, so our guest, David Thayer, can hear us. David, how's it going?
What'd you say? No, I'm kidding. Everything's fine, except for the technical malfunction taking place in my brain.
It's a great pleasure to have you back on the show. I've been looking forward to this.
Recurring guest, David Thayer.
I think I'll speak for the group as well. You know, we love having David on the show, and I noticed that you come on during holiday weeks. Last time we had you on The Last Trade was Independence Day, and now we'll have Thanksgiving tomorrow, and I guess yesterday when this releases on Friday. But David, it's nice to see you. Everything's going well, I hope?
Yeah, everything's great. And I'm glad that I lead a sufficiently boring life such that I can always be available for your holiday appearances.
Yeah, well, no, I know that you prioritize us above all else, so we really appreciate that.
That is true.
And we'll start because, you know what, Brian actually called me out last week because I did not pull up the price chart, so I will pull it up because it's in my favor.
Gotta give the people what they want.
Yeah, it's in my favor right now too because we're pumping at the moment, and it's been really sad to look at the Bitcoin price in the past month, but we're pumping. Brian, you're the quant, you have the house view. Anything you discern from this, or is it just noise?
Yeah, I mean, as I've said many times on the show, I try not to think about the short term, and you know, I'm writing the newsletter that'll come out tomorrow on Thanksgiving morning, and I speak a little bit about this, but like this notion of, well, let's define like what is long term, what is short term, and I would say, you know, most TradFi market participants and retail folks are just generally more short term oriented in their thinking, how they think about the investment landscape, how they think about an asset like Bitcoin. And I think what we've seen over the past month and a half is people digesting the real volatility of this asset. And, you know, if you bought at 120 or even 125, this may feel a little scary, the 30 to 35% drawdown that we just sort of experienced. But you do have to zoom out. You do have to think about this asset long term. And, you know, I think a conservative estimate of like, okay, what is long term? I would say it's at least 5 years. I tend to think about Bitcoin in decades in terms of like my personal investment thesis on the asset. But I think 5 years at least is a reasonable sort of long-term orientation. And over sort of Bitcoin's history, the rolling sort of window, the rolling 5-year window of returns just outpaces every other asset you could possibly own. So undoubtedly, people are going to be at the Thanksgiving table this week and maybe talking with an uncle that they got to buy Bitcoin last Thanksgiving at around 96K. And they're going to say, hey, what the heck happened? I'm down 10%. The NASDAQ's up. And there's a few just honest ways that you can speak to those relatives or those people in your life, and just say, zoom out. You know, if you're taking a position on a new monetary asset that could upend the sort of monetary order, you need to have a horizon that is longer than 12 months. These things happen in decades, not in months. And so if you have a long-term constructive thesis on the asset, Bitcoin's on sale. Black Friday came early and sats are cheaper than they were a month ago. And so that works to your benefit. This is the other realization that people need to get towards, is that volatility particularly in an asset like Bitcoin, where the volatility is positively skewed over time. Volatility is your friend. You use it to your advantage, and you buy on weakness. You buy when other people are fearful, and that's not even specific to Bitcoin. That's all investing. That's a Warren Buffett-ism. Buy when others are fearful, and so that's my house view. That's my quant view. This is short-term noise. Good prices if you have zero Bitcoin today.
I'm sure we all have a story like this, Brian, but I remember recommending somebody buy BTC when it was trading like 55. And then shortly thereafter, it zooms to 69 and then all the way back down to 16 or whatever it was. And I felt awful about it, but I also felt confident enough that it would eventually pan out. And she was like, wigging out. But here we are at 90K and everything's just fine. So you're right.
I, for one, don't bring up Bitcoin at Thanksgiving anymore. I actually would do this for years, and then after the ETFs were approved in 2024 was such a hot year, one of my aunts said, "Why didn't you ever tell me to buy Bitcoin?" So I was like, "All right, I've had enough. I'm actually not going to bring it up at Thanksgiving dinner anymore." But David, one thing we wanted to get your thoughts on as we kind of kick off the show, get past the opening remarks, get past Brian's Gigabrain quant view. I'm curious what your thoughts are just on general market sentiment. There seems to be a divergence between those who are quite bullish, particularly on technology, artificial intelligence. Yet at the same time, you have concerns among Wall Street about the concentration in tech stocks. Saw a survey that went out last week that 53% of fund managers think that AI stocks are in a bubble. And another 40% of that same survey think that this bubble popping is really the greatest tail risk to portfolio. So I know you've been an investor quite a while, been participating in various types of markets. Do you have any thoughts just in terms of divergence between those who think we have far more of a bull run ahead of us, equity is still kind of hovering around all-time highs, and those who think that the floor is about to fall out below?
Well, the only thing I would say is that I think, a lot of folks have seen or observed that the current market looks much as it did in, say, the 90s, late 90s. But, I myself see compelling arguments on both sides of that equation. And, there are a couple things. One is that, listen, we'd all love to have greater market breadth, but when you have a technological revolution taking place, it's not surprising that you're going to have a bifurcation of the market, in this case, led by 7 names, which is unusual, but not, wildly shocking. So it could be a bubble, but perhaps it's not too. It could just be a technological revolution taking place right in front of our eyes. And having said that as well, people look at PE ratios across the market and, they're historically high. But by the same token, as the 4 of us know, and many of the folks watching know, it's not surprising that PE ratios are going up over time, just because we have this asset inflation premium that's baked into asset classes like stocks, but also real estate and gold and Bitcoin and other asset class where people just trying to preserve their wealth. And so because of this so-called fiscal dominance, I think we're going to see PE ratios in a nominal sense float up over time anyway. And we can't look at history as a guide. So if it used to average in the mid-teens or low 20s, and now I think it's like in the 30s, that's that may just be sort of the table stakes going forward. But to answer your question, Jackson, I'm probably not wildly helpful because I see, arguments that are compelling on both sides of that equation as to whether or not AI is in a bubble. Now, what do you guys think?
Well, what I could just take away, and I'm sure the guys have thoughts, what I would take away from that, though, is you got to throw out some of the status quo of the past decades as it relates to investing, because we're just in a fundamentally different fiscal, monetary, macro regime. And so those who have been pointing to the price to earnings ratios the past 5 years, or probably even since, shortly after the great financial crisis, have just been sidelined as asset prices continue to melt up, because they point at frameworks that were used, 50 years ago, but may be obsolete in really where the crash is happening in the denominator. It's happening in the fiat currencies. And so everything melts to the upside over time. And if you're looking to enter at attractive price to earnings ratios historically, well, you may be just waiting a very long time to do so.
Yeah, exactly.
Yeah, the point around the sort of historical valuation metrics is spot on in the sense that that trajectory or that trend says more about the denominator being broken than it says about a proverbial equity bubble in AI stocks or something like that. So it's part of a longer term structural trend in terms of the money being broken and less about this specific area of technology that, I think rightfully so is demanding a lot of capital. I think the difference in my mind between this and maybe the dot-com boom of the 90s is that there's this air of there's an air of basically national security interest related and associated to the AI race, and that spans across energy capacity and production, as well as the actual model technology itself, chip fabrication, all of it. And so I think, if you look at what this current administration is doing, and even just this week announcing a new AI focused project, the Genesis mission, a Manhattan project for AI. They are taking this super seriously. And so part of my brain looks at this and says, well, there's been a lot of executive orders over the past 12 months that have some initial fanfare around them, and then the follow through on them is a little bit more tenuous, you could say. But this one does feel different in the sense of what I just described around the national security interests and the thought or the notion that we really, as a country, as a nation, can't afford to lose this proverbial AI race. And so the second order effect of that is like the bubble dynamics are irrelevant because they're going to spend as much as they possibly can, dilute the currency as much as they they really have no qualms in debasing the currency because they can't lose this race. And so whatever amount of currency units they need to print to support these initiatives that are laid out in this plan, everything from AI infrastructure to quantum computing and sort of energy production, everything in between, that's the big difference when I look at what's happening now relative to maybe the AI the dot-com boom. Like there is a different air around it in terms of the importance of not losing this technological race and sort of, our currency be damned to some extent.
Good for Bitcoin.
Right.
Yeah, I think there's multiple things happening here, which is hard to pin down. I think one of the key things that I've been thinking more and more about is we've effectively been in a recession since 1971 in the sense of, and then it's effectively acutely gotten greater every year because you get further away from the amount of monetary units versus GDP. So in 71, it's probably very close or at par, maybe even greater. So maybe you're not in a recession until 74, 75. But as you increase the monetary units, you naturally increase the distortion from coordinating economic activity and investments. And then what's the right denominator from return profile? And you fast forward 50 years, and then everything looks dislocated because the price to earning multiple should be really looked at in either gold or Bitcoin terms. Gold is easier because it's been around that entire time. And then you start to really understand, well, what was a relevant investment and what wasn't? And so you take all of that, and then you take money production being closest to the Fed, you take national security issues, and then you take energy, which are all intertwined. And that's where you get the AI output. And I think there's a confluence post 21 and interest rates rising where you needed a vessel to absorb a lot of capital, specifically in private equity, because everybody was underwater in the vintages around 21, and AI was that natural thing to step in. And there's a lot happening. I think that there's just a lot happening there that have second and third order effects, mainly narrative driven approaches, because you see these layoffs, you see these things happening, but you also know that AI is not being integrated at a level to warrant the layoffs yet. Like you could talk to people at these organizations, you can see the studies. And so it's this nice narrative to be able to absorb where like the fundamentals are dislocated, where inflation's running, these companies' unit economics aren't there. They can see the writing on the wall because they have the smart people to quantify where inflation's going, where purchasing power is reducing. And AI just naturally sits in there. And then you obviously have the geopolitical issues across the world with who wins AI from a number of things. Quantum is a great example. So it's a fascinating, multi-faceted aspect. I do think the quantum stuff ties into it in an interesting respect because there's a race for quantum from, I think that ties into national security and everything I've heard. And we don't have to go deep here, but that's a podcast we'll need to do because there's a lot of FUD and narrative around quantum and Bitcoin. And I'm fairly confident from engineers for years and then just recently, just listening, going very deep, that at a very conservative case, you're still at or a very accelerated pace, you're still at 5 to 10 years away, roughly, of any kind of like quantum computing, because there's a reality of like the amount of capital and time that would be required just to break like one encryption key, let alone what you would need to do to really like change the protocol. And so that just randomly kind of gets inserted with all this price appreciation and what's going on right now, that I think they're all kind of intertwined together.
Agreed. And also, like it bears mentioning that, with a lot of these technological advancements, the so-called economic rents don't accrue to the actual players; they accrue to consumers. And by the way, I mean, to your point, Brian, I mean, Michael, the point about the extent to which this may cause joblessness, I think might be oversold, because I think many of us have heard this. I'm at least old enough to have heard this before. Every time there's some major advance, it's like, it's going to be, displacing all these workers. And as yet, that hasn't happened. So I'm a little bit skeptical about that claim. But yeah, it's going to be really interesting to see how this plays out. But I do wonder the extent to which there are going to be fortunes to be made, in sort of widespread sense. A few individuals might get super rich off this latest technological wave in the form of AI, but typically consumers benefit from it, and I do wonder the extent to which these companies are actually going to be quite so profitable as we expect they will be. Although, Brian, to your point, yeah, having the government providing that tailwind does kind of change the complexion of what is transpiring right now. Although, there again, every time the government gets involved in something, I would claim it's often kind of a debacle because they're interfering with natural market mechanisms. But it does kind of provide a floor of support for what's happening in that space.
Yeah, it's a good point. Like what you're referencing around OpenAI and Altman, I think they walked this back, but there was some notion of like, yeah, we might need a government backstop at some point. And then the other, just this week after the Genesis announcement, David Sachs, the AI czar, tweeted something to the effect of like, the stock market is, 50% of it basically is being driven by a very small handful of AI names. If this bubble pops, like we're in a recession, like he said the quiet part out loud, basically, like it's accounting for half of GDP growth, a reversal would risk recession. And so he's telling you the game a bit here in terms of like, there is, at least to some extent, probably some backstop for a lot of the spend, even if the, return on invested capital doesn't make sense or it's a lofty forecast. Like it's kind of irrelevant because we need to win and we're going to do anything and everything we can to do so.
Yep.
I think, yeah, there's a parallel here as well, just on the Federal Reserve topic, because Michael loves to talk about the Fed. He likes to talk about where interest rates are going. But in all seriousness, I would say the market participants need to pay attention to the fact of what you guys are describing in terms of the strategic aspect of artificial intelligence in the context of a great power competition with other countries, notably China. And the same would apply from the fiscal perspective when you tie in gold, Bitcoin, and U.S. Treasuries. And so there's some news that caught my attention as well, particularly around the supplementary leverage ratio, which was in 2020 kind of pretty much there was, I forget the exact way to categorize it, but the Treasury, U.S. Treasuries were no longer really accounted for as part of the bank's balance sheet, in the sense that you could just start lending a bunch without having to have certain reserves held in Treasuries. And it looks like that's going to be coming back. And that really ties into the fact that, well, there needs to be demand for our debt, right? And so we've all heard the story of de-dollarization over time, really since 2014 to present. And we're getting to the point now of, well, we have tens of trillions that will need to be rolled over in coming years. Who's going to buy it? I mean, there's stable coins. We had the Genius Act this year. They're going to play a critical role in adopting and purchasing U.S. Treasury debt. But the banks are going to be forced to purchase the debt as well, because if other countries are moving away from U.S. Treasuries as a strategic reserve asset into gold, notably, well, then the U.S. Treasury needs to artificially create demand. And so I just saw, it might have been today, that they're going to be making some revisions there in terms of regulations around how much you can it's removing these securities from the supplementary leverage ratio would also help insulate the Treasury market from stressful episodes. So that's exact language there where we need to avoid dysfunction in the Treasury market. And so this also ties into the fact that right now Bessent is interviewing new Fed chair for 2026. And I don't know if it's a rumor or if it's legitimate, but Macroscope tweeted about Kevin Hassett, who's considered the front runner at the moment, who has a very positive stance on Bitcoin and crypto, has been involved as an advisor in some notable companies in the space. And so I'm curious if you guys want to like try to tie this back into this narrative of, some things are critically important. And so when we're talking about the Treasury market, we're talking about the Fed really just less independence there, having to support the Treasury market. What do you guys make of all that?
By the way, I have to chime in, Jackson. I like your little photograph there in black tie. your
thank you.
Avatar. But well, touching on the point that you just made, Jackson, about artificial or real demand for treasuries, there's several options that could be on the table here. In addition to banks being required to buy treasuries, you could also see something like a world in which, okay, Mr. American citizen, if you are availing yourself of tax advantaged accounts and we're allowing you to invest in, say, a 401k or one of the IRA products, you must buy, treasuries as a portion of your account, all for your safety, of course. It'll be sort of covered in some sort of language like that. Another possibility is if we're going to support a country like Argentina or another partner whom we're assisting, we could say, hey, part of, and this is kind of in the de facto, so it's been the case for years, but we could more explicitly say, you must buy treasuries in return for our support. And then, of course, stablecoins too. I think this probably has more, much as we predict sort of the end of the fiat system, this probably has a longer runway than many of us think, simply because there's so many tools at their disposal, artificial as they may be, that would kind of provide that foundation for treasuries or even the U.S. dollar. Like we could dollarize economies. For instance, like Argentina used to be dollarized. I mean, they too could go back to using the dollar. But again, what do you guys think?
Yeah, I mean, I think that's a good point. I think we've danced around this notion of with Matt Pines and other folks from BPI that Bitcoin for Bessent and Trump in the administration was like the gun on the table, is like a wild card to be able to play, when it probably was much greater than that. It was always going to be played. And this is the framework that's been being like worked on for the past 12 plus months. I think Brian, in his notion of looking at it from a longer term view, we've talked about this a lot when you look at like Trump and Trump's family's portfolio, right? It's not watch what they say, but watch what they do, or watch where their pocketbook is. And so when you look at the writing on the wall with like Bessent and even like your point around stable coins, I think it went from 200 billion to 300 billion roughly in the past 12 months, with Bitcoin's price being relatively flat. What happens when Bitcoin's price moves? And it extends that longevity of the dollar. But then to the Hazlitt point, putting somebody like that, I think Polymarket I was looking up before we started, is like 52% now that he would sit in that position. He sat during 2020 around COVID and the stimulus that happened there. I think still sits as an advisor to Coinbase. You can start to see these like positions being made around this like East versus West play around, East is absorbing a lot more gold than I think is generally like recognized. And the Western opportunity is this forward-thinking nature of not only Bitcoin, where the majority of it sits, capital formation on the public treasury side, along with the ETFs, and then just the amount of individual holders being majority in the US, that this is kind of the framework that's being set up. And so these like price action is just short-term volatility to a longer-term gain that is needed from a strategic perspective from dollar hegemony. And when you look at it from that angle, then it's a lot easier just like close the laptop and go back to work, because this thing only goes in one direction.
Yeah.
Yeah, David, I think you make a great point around just the timeline. This is something I've thought a lot about over the past year or so as the administration became so positive or favorable to stablecoins. It became very clear that that was going to be one of the many tools in the toolkit to continue to kick the proverbial can down the road in terms of um, maintaining global reserve status while still basically being able to debase the currency. And so I think that is the plan, and I think you're right that it probably extends the dollar's life, more than most people would have expected, prior to this administration just being in power. I think that would be the line of demarcation. The other thing too to think about is just like back to your point around the long-term nature, like I think Mel Madison, who we had on the show a couple weeks ago, put it very well in that this administration, really any government, like doesn't want the inflation and the debasement to show up in the real economy. So goods and services, real estate, education, et cetera. It's actually kind of nice for them to have purely monetary assets that can absorb a lot of that. And so, I like to think of both gold and Bitcoin as these sponges, as Mel put it, that are basically more favorable for the country and these politicians to get reelected if the inflation isn't necessarily showing up in people's everyday lives, but in these monetary assets. So I think that is part of the plan, whether it's the gun on the table or the stablecoin dynamic. It's all kind of intertwined, but I think that's where we're heading. And so I think that's totally spot on in terms of just being aware of the timing, but also aware of what they would actually like to see happen and what they want to avoid happening.
When it comes to holding Bitcoin securely, peace of mind starts with architecture. Onramp's multi-institution custody distributes control across 3 independent regulated key holders in a 2 of 3 quorum. No single point of failure, no pooled or omnibus exposure, segregated client-titled vaults. You retain full legal ownership while Onramp coordinates security, compliance, and operational workflows behind the scenes. It's strength of many delivered through the simplicity of one. Multi-institution custody is the foundation for everything we build. Sound infrastructure that distributes counterparty risk and provides fault-tolerant resilience with clear audits and institutional controls. And now Onramp is piloting flat, predictable pricing, making best-in-class Bitcoin custody and financial services more accessible now than ever. Onramp, strength in many, simplicity in one. To learn more, check out onrampbitcoin.com.
Real quick, not to put you on the spot, David, but I'm assuming you're good friends with Besant now. Were you at PubKey in DC rubbing shoulders with him, or I assumed you were there, but I just thought I should ask.
Well, Besant and I are obviously the best of friends. No, but I was just last night talking to Thomas Pacchia, owner of PubKey, as you know. And I was supposed to have been there, but I had another function to attend related to my former employer Thursday night, that exact same night in New York. So I had to miss it, but it was quite the success and great fun to see him there. And I'm sure you've already talked about it on prior pods, but seeing him also tweet out on October 31st his shout out to Bitcoin, which is pretty neat to see. Were any of you there? I take it you weren't. Is that right?
I was not. David,
Okay.
I'm waiting for Philadelphia to have a PubKey.
A little inside baseball here. I just recommended to Thomas last night that he buy Cherry Street Tavern.
Nice.
Don't think
There we
it'll
go.
happen, but
There
we'll
we
see.
go.
Now we're talking.
So, yeah, where were we?
I have some thoughts, and it actually ties into one of the things Michael wanted to discuss today as well. But I think we don't need to spend too much more time on it, but there is a notion to, if you think back earlier this year around Fort Knox and, Elon and all this crazy shit about we're going to audit Fort Knox. And I take that as a signpost that there's ambiguity about the amount of gold that is actually held in reserve by the United States government to the downside, right? There's a lot of suspicion that there's less than the reported amount. And the flip side is in China, there's a lot of suspicion that their reported amount is very much under-exaggerated. So they own typically most people in the gold markets think that China owns way more gold than they actually report. And so I think a lot of what you guys shared really ties into the idea that Bitcoin is a strategic asset for the United States. I mean, the United States has no doubt about it the most wealth in terms of Bitcoin in the broader space. The companies are here as well. I mean, there was some offshoring that was happening in previous administrations due to just unfriendliness around how the industry was being handled, but a lot of companies have onshored. Of course, Texas being the leader in Bitcoin mining. So I think there's just too many signposts to ignore. And to Michael's point, the Trump family, the administration, there's just a lot of hands in Bitcoin, and people are just self-interested. And I don't know if it's actually that complicated. And so I think that the United States will continue to prioritize Bitcoin, not to say they'll not prioritize gold as a neutral reserve asset, but I think the people in power understand that the United States has a strategic position above other countries as it relates to Bitcoin. One thing that tied back to Michael that was interesting is Tucker. So my Tucker voice. Tucker Carlson is joining the gold rush. This is interesting. I think he's been a proponent in terms of some of the talking points that we'll share on the show just about central banking and the dollar. But interesting to see that he is going to be, what is he, launching a company, or is it involved, or is going to be involved now in a gold and precious metals company? David, I'm not sure. Did you see this as well?
Yeah, I did. I think he co-founded it with a guy he's known for a while, whom we also just had on his show. And I think the angle there, as you may know, is gold purveyors have been famous for kind of ripping their customers off, and so this alleges to be a company that's going to be a little bit more transparent, straightforward about the VIG, the amount that they're making for on each coin sold and that kind of thing, and more transparent in terms of the custodial options and so forth. And Michael and I have talked about, I think we've probably talked about this on the pod before, is that, listen, we're all Bitcoiners, but I think there's probably room, at least in the short term, for a gold position too. And we've probably been a little bit dismissive of gold in the past as a community. And yet we have so much in common with the people who favor gold, and we probably ought to lock arms and fight the fiat system instead of saying, Bitcoin's the future, which of course it is. I mean, digital gold is so much better than the existing offering, but nonetheless, it still has legs, and we've seen that this year. What do you guys think?
Yeah, I think the gold narrative and understanding is one of the biggest misses from a societal standpoint, and then definitely from the Bitcoin investor side. I think Groman has provided the best and most succinct look at, and randomly somebody else on a completely other spectrum came to the same conclusion of Arthur Hayes, when he looks at Bitcoin's trading pair, doesn't look at it anything else except for to oil barrels, because oil barrels derivative of that is everything that exists in production, whether it's how do you sustain an economy as a sovereign, to how do you produce anything that's a derivative of petroleum. And so what Groman posits is that at the end of the day, if you're stacking debt like China was and it's becoming debased, well, eventually you won't be able to export. You won't have the funding if your treasuries are being debased to what you need to buy, which is oil exports, food, and other things. And so naturally you need to hold an asset that's neutral like gold. So as it arises in purchasing power, it becomes not only more accretive to you as a sovereign, but the trading pair is what's most important. So like they've been working on setting up all these different exchanges globally so that people can net settle in yuan, but then not have to trust them to trade that for gold, and the gold sits within their walls. Gold will be able to sit transferable in like Singapore, London, UAE. And so when you look at it through that lens, and everyone wins there because the natural citizens holding spot gold as well as a sovereign, you're able to, as gold appreciates, it's just a natural reason why you need a neutral reserve currency. So you take that, and then you take the natural lack of understanding of Bitcoin, and even the most hardcore folks that are adopting it still get fudded out by quantum and all these other things. So how can we expect the rest of the world just to come to that conclusion that Bitcoin is the thing, but they do need a neutral reserve asset to retain their purchasing power? So you add all that together, and what you're really looking at is basically the emperor has no clothes, in the sense that debt is the risk-free rate being revealed, and that's not true. And that's the thing I think from the Tucker thing. He's an opportunist. It's the same trade as if he wanted to launch, I got like Nick Nax here. He does his Alps or whatever. It's like he knows his demographic. He knows they'll buy in the same way that demographic is ready for sound money to be marketed to them. So he's making some money. But the thing that I take the greatest note of is just the debasement trade narrative that sound money is coming back into the forefront. And it's kind of crazy because gold is the largest asset class in the world. It's $30 trillion. It's going to go much greater if that thesis around needing a better trading pair for oil and just other goods. Nobody knows how to buy it. Like, think about $30 trillion. It is insane. That is like a concerted effort to make sure nobody actually understands the underlying. So how do you buy it? How do you make sure you don't get squeezed? Where do you custody it? And historically, people have done very small allocations, whether it's individuals or institutions. And in the same way, we talk about Bitcoin and how on a long enough time for there'll need to be a standardized way for custody because that's just how people manage large amounts of wealth. There's going to increasingly be better products and services for individuals to institutions to manage portfolios of 1, 5, 10, 50% in gold. And so we're just in an early stages of this like sound money renaissance. Nobody's really talking about that. And I think it's fascinating.
It is. And so actually compared to or referencing something you said, Jackson, I mean, what is the on-ramp house view, if there is one, on whether or not the U.S. government sort of understands this? We know that like BRICS countries, China and so forth, are buying gobs of gold, and we understand why too. But, it feels like the right move for us is to outflank them and to, establish that Bitcoin reserve. But are the folks in this administration smart enough to understand that? I mean, there are kind of conflicting signals, but so I'm curious to know what the three of you think.
Yeah, I mean, I think that stable coins are the first priority, just in terms of having the demand for the debt. But I mean, listen, I'm not going to pretend like I know the answer, but I would say that this is well understood. That Bitcoin, there's already so much wealth held in this asset class within the borders of the United States. There's so many companies, as I had mentioned as well. There's businesses that own Bitcoin. And a lot of other countries have been very hostile, whereas like we've been somewhat hostile or neutral over the course of the past 15 years. A lot of countries have been very hostile and have more stringent regulation and just have politically fought Bitcoin. So I think there is an advantage that's being understood. There's also the news in Texas. Got Big Mike in the big state of Texas. They allocated 5 million of the initial 10 to Bitcoin. They bought the dip at an 87K cost basis. So, I think, David, there's one way to answer it on the federal side. I think there is an understanding, or maybe it's just copium, but I do think there is an understanding of Bitcoin and the strategic relevance. And then on the state level, I mean, this is good news. This is something that Texas committed to several months ago, and they made their initial allocation. And I'm sure Michael has thoughts on this as well.
Well, just to go back to David's point, I don't think they're mutually exclusive in the sense of if you and your neighbor are competing and he accumulated a bunch of gold before you did and you want a chance to get to the same level at par and you have a strategic opportunity to get better gold earlier and then maybe evangelize for it so it can outrun gold, like that's effectively what's happening here. Because I think if it's widely understood that China is underreporting their gold, I'm sure the powers that be, whoever national security understands that not only China and Eastern countries from a natural production perspective are growing, but also they've been growing their gold reserves. We obviously have our gold reserves, but you need, and you win as gold appreciates to offset debt obligations. But then Bitcoin could be a strategic opportunity. And it also makes sense that the U.S., not to say that we exist in a free market or I would say we're more prone to free markets, which just sounds funny because we kind of live in a weird time. But point being is like we would be more apt to adopt this form of free market in Bitcoin than something like China. And that's just by nature of holding the majority of Bitcoin here. It seems like a asset that was founded on American principles. And so that's what I think is ultimately going on, is that like we knew we needed to offset into this gold trade. More people are going to be sovereigns holding gold, but Bitcoin is a strategic opportunity to accelerate kind of sovereign holdings. And then to Jackson's point, yeah, the state stuff's interesting because we've been very close with them. And Lee Bratcher met with the Texas comptroller a few months ago around this kind of positioning. And it was very cool to see that they allocated during this dip to the ETF, because the initial stance, and this is pretty much public information, was state of Texas is very sophisticated and wanted to look at like a self-custody option, something like multi-institution. And the reality, though, is there's a process when it comes to a sovereign, and you can imagine from RFIs to RFPs to vetting, and that takes, months, if not years. And the idea was that they can get exposure via their treasury accounts, and they're already like plumbing via BlackRock and security-like exposure via the ETF. And there was a transition to say, like, let's buy this dip, let's get the exposure, because also it's a very big win. Most people don't care how they got the exposure, just that they got it. And so it's awesome to see. And I think it's going to just really set up. It's really like the first, 4-minute mile. You just need the first one to do it. And then, others start falling in line. And it's cool to see states kind of taking a little bit of the initiative and where we kind of know and offsetting these debt obligations at a federal level.
Here's the conversation no one wants to have. If something happened to you tomorrow, could your family access your Bitcoin? Really think about it. The seed phrase hidden in your house, the hardware wallet in the safe, that complex multi-sig setup. You understand it, but does your spouse? Do your children? Billions in Bitcoin are already lost forever because people did not plan for this moment. Onramp's inheritance solution is built into our multi-institution custody from day one. 3 institutions, clear beneficiary designation, and professional succession planning. No technical knowledge required from your heirs. And with our new flat tier pricing starting at $250 monthly, your family won't face surprise custody costs just because Bitcoin appreciated. The same predictable fee whether Bitcoin hits 200K or 2 million. Don't leave your family's future to chance. There's strength in many. Visit onrampbitcoin.com/inheritance. That is onrampbitcoin.com/inheritance.
Do you guys think Bitcoin is getting politicized? The last thing I want to see is, and this has always kind of been percolating beneath the surface, is, Trump pro-Bitcoin, Texas pro-Bitcoin, and people on the other side of the fence feeling like, well, whatever they like, I don't like. And we all know, and Troy Cross has spoken to this and others, that that's not the case, but I certainly don't want us to suffer from that perception issue. Any thoughts on that?
Personal experience that it is politicized. Ties back into the Thanksgiving conversations, but I've had some family members say that this is just like Trump and he's pumping things and he does it because it's for himself, and there's probably an element. There's no denying actually. There's an element to that with Trump, but 100%, David. Yeah, I think Bitcoin's politicized. It's unfortunate because, as we know, anyone can use it. It doesn't matter who you voted for or what your beliefs are, and that's one of the great things about it. But yeah, I don't know. I don't know from here if that gets worse or better. You know what I mean? I don't know if it becomes less politicized over time or becomes more politicized. I think one way it would be less is if other states, that are left-leaning were to adopt a Bitcoin strategy, similar to how Texas had made that initial allocation. But I think it remains to be seen. I could easily see that, Ovik Roy, I'm pretty sure he's one of the, him at BPI, he published something about, and then they fight you. And the whole idea is like, well, if you don't get enough consensus within the government, within, the private sector as well, at some point, Bitcoin will be very much stigmatized, and maybe, there will be attacks on Bitcoin or political attacks on Bitcoiners. So I think it is really on us as an industry. We want to get there. We want to have the consensus. We want to have people bought in from both sides of the aisle, but it still remains to be seen if that happens or not, in my opinion.
Yeah, I would agree with everything you guys just said. I think it is currently somewhat politicized. But to me, it's sort of like any other sort of perception of Bitcoin. Like there's a certain maturation that's occurring. So like you could think of just this notion that, 5-10 years ago, Bitcoin was perceived as for criminals. Now people still say that, but like the very uneducated folks still cling to that. But like by and large, most people understand like Bitcoin's actually a pretty bad currency to use if you're a criminal. And so I think it's similar to that in my mind, where like right now, because Trump is president and because they're making these executive orders and his sons are launching mining companies, like there certainly is that perception that this is a Trump-led thing, and given his sort of history around launching a stake company and other things, like it just feels like he's just being an opportunist. I think the other reality at hand though is that like there is at least, it's somewhat known now that there is a voting bloc that cares about Bitcoin or digital assets. I think there are certain people on the left, Democrats, who recognize that was at least partially, somewhat of a swing block in the prior election. And so that's going to be the case in the midterms and then in 2028. And so I think I'm sort of optimistic enough to say that I think they will recognize that it doesn't behoove them to be anti-crypto or anti-Bitcoin, even though Trump has sort of heralded it and taken it on as part of his platform. I think there will be consensus that no, there's just a group of citizens that only care about this thing, and we can't afford to isolate them because our margins are so thin on all this stuff. So that's kind of my hope, is that it's going to take time, because right now we're in the middle of it. We're a year into this administration, so it does still very much have that perception around it, for sure. But I think as we move forward and, there's new elections come up, people are going to realize that this is really a bipartisan issue, particularly on the stablecoin side. I think the rate at which the Genius Act, was drafted, went through process and approved shows you that a lot of this stuff is bipartisan. And as people get more educated, come up the curve on a lot of this stuff, there's going to be a greater recognition that there's a group of Americans who care about this, and they actually don't really care about all these other issues. And so we have to be open-minded to this at least, and not be anti or attacking the industry and pushing innovation offshore, et cetera. So that would be my optimistic take. I think, to answer your question, yes, right now there is that perception, but I think like anything else, like any other perception around Bitcoin, as education widens, as the realization that there's this voting block out there materializes, that'll go by the wayside.
So David, in true fashion for last trade, I take the more sobering, more, as the general elder host, this is a common thread we've had, when it comes to proliferation of crypto, and it's all over. Bitcoin's the only noise, and it's I want that to be true, but the reality is most people don't know what's happening. So we're still going to see that the craziness ensue as the market comes back and liquidity comes in. And the same thing here is, I very much want to agree with Brian, but I don't see it playing out. I think it only accelerates into the other side. An easy, more hyperbolic example is whoever the new mayor is in New York getting close to Ripple and sending out a bunch of Ripple to a bunch of people, and just completely obfuscating what Bitcoin is, how it empowers an individual to store and preserve their wealth, to the more natural version that I think we all will see as, UBI and stable coins, and, the dumping of these things, and the wealth disparity, and the natural, adoption from 25 to 30, 55-year-old white males, and, Bitcoin in the United States. And I hate to cite it, but I will, because I didn't read it for 4 years, and Matt Odell was just pounding this book, the manuals. And if you go and look at that book's not a theoretical. It's basically a nonfiction dressed up as a fiction. And when these things happen, people look for people to blame, and they look at it becomes politicized, the disparity grows, and people look for scapegoats. And so, because you can't give anybody Bitcoin, there's no UBI, despite what people have claimed on here with Bitcoin. That's where we end up. So I think it gets worse before it gets better.
Well, you're right. That is sobering. That's no fun. Go over to Michael.
Yeah, that's
Kidding.
what I'm saying. All I could maybe
But
add
that's
to
why
that,
we ought to underscore, the human rights angle, and some of the things that are more aligned with the other side of the fence, because, it's genuine and it's real, and it's not just about NGU, right?
It's a great point. And part of it's on us, right? As Bitcoiners, as a community, I think you could look at the past 12 months and say, to your point, maybe we should have been focusing more on the human rights components of Bitcoin as opposed to the DAT craze and financial engineering. I think that there is probably some self-reflection that's required, broadly speaking.
The problem with it, so just to completely take the other side, is I actually fully don't agree with that, because it's the point of what is it? Hard choices, easy life. Easy choices, hard life. When you give it to somebody, initially they don't see it, and the thing that saves them. Everyone's been there. Whether somebody's giving you the advice or you give it to them, you're like, I know I'm right. You don't get it. In 3 to 5 years, that medicine you'll recognize was the right thing. And at the end of the day, there is only one thing that furthers Bitcoin adoption and growth. It's literally number go up. Everyone will get it. Everyone will realize it. It's the sole thing to focus on. And then people will wake up and realize everything we're talking about. Like, we could take 20% of the efforts and focus on the human right thing. There's people doing that, and it's great. And Bitcoin's the most egalitarian, ESG, like, it does all of that. But the only thing that will let people adopt it, its success and its awareness, is literally number go up. And that's the one thing to focus on, because you need billionaires to park their money in it, because that's what adds to the liquidity profile. But nobody wants to hear that. But it's just the truth. Like, so anyway, I can't.
Well, Michael, check your financial privilege. No, the but I think that's Alex's point, Alex Gladstein's point. It's like, it's true for us, but his thesis is that, the bottom billion are desperate for Bitcoin, but for an entirely different set of reasons. Having said that, I think you're absolutely right. In sort of the developed world, it's a great point that, it's the financial gains that that will get them kind of in the door.
And the liquidity profile, because like Alex is right to a certain extent,
exactly.
But like, if there's only one person or there's only X amount of market cap, just because they can hold that form of money, if it dumps because somebody just sells in the market, then they just lost all that purchasing power. So you need the liquidity profile. The amount of like large holders, large economic holders, is what moves the needle. You rather have 1 million high net worth people deposit money in Bitcoin than 1 billion people with $1 to put in, because it helps the other 7 billion there. It's just
true.
Economic literacy. It's just a story that people like to hear. That's why we used to go back in the day in 21 and 22 about, I think I was in a room with Alex talking about this, and it ended up getting a little heated. It was around, it was always emergent markets. And then it became, the global south. It was the psyop of all psyops, because it's like everyone wanted to invest in the global south, but there's no money in the global, like, there's no way to make money, and you have to make money if you're going to continue the investments.
Well, I saw Marty Ben last night, and he reminded me of that phrase, and I'll probably butcher it, but you guys know it. It's like, come for the profits, stay for the revolution. And that's essentially, it sounds like what you're saying, Michael. Once they're in the door, then people can have their eyes open to, the humanitarian utility of owning Bitcoin. But what gets them in the door is, hey, this could be both profitable and liquid, and it's a very attractive financial profile.
100%. And I learned all these things the hard way, because when I came into Bitcoin, I was very ideological. And then when I started working in this space, I didn't come in to get rich people richer. I came in to get people that didn't have capital to be able to preserve it. And I learned very closely with working with Parker Lewis that when we were building Unchained, it's a very similar model here with Onramp, is you have to go where the money is, because the money is what, not only, it's the same concept. You have to be able to save yourself before you can save anyone else. Your business has to have fundamentals. You have to go to make sure it's viable so it can persist in the future. But also, the people with money are the ones that will move the needle around the liquidity profile and adoption with Bitcoin, and then everyone gets to benefit. So that's the core angle there.
Yep. No, it's a fair point.
Yeah, I agree totally with you, Michael, on the number go up aspect. I guess my point was more around like the perception angle of, like, the DAT craze, Bitcoin per share, like not focusing on even just the number go up component of, like, let's protect ourselves against debasement. Like, I do think that there is some room for improvement in terms of, the vocal leaders, quote unquote leaders of our industry. Like, look at a Michael Saylor who's, tweeting AI slop images and saying never back down. Like, that's the perception I want to avoid, because that does actually scare away the large pools of capital that you're referencing.
Are we going to talk DATs? Is that the transition to DATs?
We're gonna get there. We're gonna get there for sure. But I think it's an interesting observation, because there's a bit of a culture war happening within this industry at the moment, and I feel like we sit very neatly in a nice middle ground. We have a very moderate stance as a business, whereas on one side you have, the proponents of self-custody, ideologically driven Bitcoin. That was really the big culture of the 2021 cycle. And there's still, a strong remnant of that. And I think that, of course, needs to exist. But the culture of this cycle has just been suit coiners, DATs, Wall Street coming in, mucking things up, which was inevitable as well. But I think now there's like less consensus on what Bitcoin actually is and what purpose it serves. Like, I think there are very few conversations around Bitcoin's monetary properties that happen in JP Morgan, right? They just launched, or they're going to be launching a structured product, which we should talk about. But I think there's like this tug of war happening now between the people who came into the space, 5 years ago, who have an idea of what Bitcoin is. And then you have particularly the Treasury companies, right? The Bitcoin yield, all this stuff. Like a lot of the proponents of that really never even talk about the merits of owning Bitcoin directly. They just, are talking about how their company can grow Bitcoin per share and use capital markets to acquire more Bitcoin. And so I don't know, where I'm going with this, but I think like as a business, we recognize that both are true and both have merit, because you need to have people who, use Bitcoin in a censorship resistance way. And there's going to be people who use it in a different way outside of the US, in, let's say, Brazil as an example. There's a different set of circumstances there that may afford you different reasons to want to own Bitcoin than have it as an investment in your portfolio in the United States. Likewise, there needs to be adoption. To Michael's point, there needs to be bought in people within Wall Street, within tech companies that embrace this as individuals and also as companies, or else at some point the adoption doesn't materialize, right? So there's like these, I think right now, culture war that's been happening for the past year. I don't know how that resolves exactly, but I did want to get, David, I don't know if you saw this, but it's interesting, right? And this is going to be certainly a trend in terms of structured products around IBIT, around the ETFs. For those who are not familiar, I can just call it out real quick. So structured products are just ways to use different financial instruments to drive different types of outcomes for an underlying asset. So in this case, JP Morgan is now going to be offering a structured Bitcoin product using IBIT. And how this works at a high level is you can pretty much, if I say this correctly, there's a 2028 maturity, but right now, sitting November of 2025, a year from now, depending on where the price is, you would have a minimum guaranteed return of 16%. So you're kind of like mitigating some of the downside or flatness that we've seen this year. Should Bitcoin not be up, then it kind of terms out to the full 2028 term. And depending on what the price does between now and 2028, you have different ways to participate in Bitcoin's upside or downside. So this is ultimately a way for institutions to sell product, but also to provide solutions to the investors who maybe don't want Bitcoin's highly volatile underlying asset and probably don't give a shit about sound money, right? So it's like, this is kind of going into the culture war stuff as well.
And I hope this, because I'm very curious, David, your understanding of this, but just to clarify, what they're saying is between now and a year from now, if the price is greater than what the person bought in, they get it called and they get it just 16%. So BlackRock or IBIT participate in all that upside, and they're only getting 16%. If it's below that and they hold till 2028, they're going to get 1.5x on what their basis was. And if they're underwater by less than 30%, they're going to be made whole.
By less than 30. And then if it's more than 30, they lose.
Yep.
Yep.
I mean, it's pretty savvy when you think about it, because it plays to all the different investor types. We've seen this firsthand. We've structured certain products for large institutions that they want, like generally, and David, you can speak to this. Some institutions, when they're going to allocate to an asset manager, they want to sit on the same side as the asset manager, so they have no problem giving away some of the upside. So it makes it more palatable. It's curious though, the 1.5x from that. But anyway, yeah, I was trying to understand that. Now I have a better lens, but I'm just curious your thoughts on just like that product in general from an asset manager perspective.
Well, there's so much to say. I mean, I don't know if you saw Simon Dixon sort of posted something about this product and crucified it, just in terms of the manner in which MSTR might be trapped, having participated in some financial engineering and entering into sort of the Wall Street space. They might be at Wall Street's mercy, is his thesis. Now, that's just kind of a sidebar. With respect to the JPM offering, much as we stand outside the TradFi fiat system and object to it, I mean, this was inevitable. I mean, once the IBIT and similar ETFs were introduced, financial engineering was just going to come around. eventually, especially once the Jamie Dimons of the world recognize that Bitcoin has legs. And so, right, wrong, or indifferent, I think this is just the first of any number of structured products to come. And I don't think I even object to it. I just think it's sort of an inevitability, and they're serving a certain segment of the market whom I think it was you, Jackson, maybe it was you, Michael, had said, they probably don't give a crap about, you know, sticking it to the fiat man kind of thing. And what they really want is just those returns. And what's also interesting is that it seems like JP Morgan has not only accepted the inevitability of Bitcoin, but now they're trying to ride its coattails, and they're one can kind of reverse engineer their assumptions as to where Bitcoin's going. If they feel comfortable with a 1.5x return and also providing that floor so far as so long as the losses aren't greater than 30%, then that's kind of interesting. It seems like they're
Yeah.
on board and believe, as we do, that Bitcoin's going in the direction it's going, and that they're happy to take the return in excess of 1.5x in 3 years' time.
Yeah, the one thing I'll share from that, I think it's a net positive. And I think that I'm a big fan of like counter positioning, right? So like whether you're a startup or you're just like you have challengers and you're always trying to figure out what is your economic or your narrative advantage from what is happening. And so one of the disadvantages that exists across the world is Bitcoin education around digital assets, and that's generally a negative. But in the same way that education is a gap, there's an education gap on the potential upside and where it goes. So if you can deliver structured products and narratives around how to get people in while limiting upside and downside, there's pockets in different segments, whether it's individuals to institutions, that you can capitalize on. That's a free market. You get them in, and then you can gain economic advantage. And we've seen this internally with different institutions and what kind of products they need. So that's how I perceive this, is it's just meeting the market where they're at, getting them exposure. And as long as they can hedge out and everyone is made whole, you're going to get net new buyers in that want to limit the upside while also limiting the downside.
Exactly. And one other thing that I would just mention, this again came up last night, is that it's not only about the network effects and what that means for Bitcoin's price over time and viability and robustness, but it's about, within the US, but other countries too, the extent to which, if you have broad-based ownership, then the political and regulatory risk is diminished, right? Because people are going to push back. Oh, okay, it's way too late to outlaw Bitcoin or something like that. But they could say, all right, we're going to tax the crap out of it. But if you have this widespread ownership of Bitcoin in whatever sort of derivative form, there will be enough of a political constituency to say no. And that's really important. It can't just be a
Until
bunch of like hardcore Bitcoiners making, significant donations to their favorite candidates to ensure that.
until they try to fork quantum coin, and then that all
Okay,
hell breaks loose.
that's
But
fair.
that's a different conversation.
Yeah, I mean, this is important. It was going to happen. I think structured products are interesting. I when I worked at Stifel, I was on the alternatives desk, and right behind me was the structured product desk, and they're just constantly getting calls from advisors who have high net worth, ultra high net worth clients who want different type of participation in assets with different upside and downside characteristics. So, I think this is interesting. I think we're going to see a lot more of it, and the the point I want to make as well, because someone's gonna comment, like last week someone was like, oh, am I supposed to listen to this guy at the vest on? They're talking about Michael. Now I have a vest on this week, but like it doesn't diminish anyone's ability to use Bitcoin however you want. So I don't see
Yeah.
why this is such a big deal. But we're gonna see a whole lot more of it, that's for sure.
Yeah, I think David hit the nail on the head in terms of the biggest signal to me around this is like it tells you what they think of Bitcoin and the trajectory. And like if I'm understanding the structure correctly, like they make the most money if Bitcoin is up way more than 1.5x in 2028. So the way
So
they've
what's
structured this
Diamond's price
structured
target?
yeah, higher. His price target is much higher is basically the real signal from this.
Here's what keeps Bitcoiners awake. You're still securing millions of dollars the same way you secured thousands. That hardware wallet in your drawer, your family's entire future depends on you not losing it, forgetting the PIN, or something happening to you. Onramp's multi-institution custody removes that burden. 3 independent institutions hold your keys, no single point of failure, no seed phrases to protect, no explaining complex recovery processes to your spouse. And now we're offering flat tier pricing. One predictable monthly fee starting at $250, whether Bitcoin is at $100K or $500K. Plus, with Onramp IRAs, you get the same institutional security with tax advantage growth. This is how smart investors protect generational wealth without the weight on their shoulders. There's strength in many. Learn more at onrampbitcoin.com. So I know we have a hard stop in about 10 minutes. There's 2 things that we have to do, at least from my perspective. We have to talk about Treasury companies very quickly, Michael's favorite topic. Because one thing, I don't know if you guys saw this as well, and I'm not sure the validity of it, but the market nuking back last month, October 10th, there's now rumors about MSCI, which is one of the big index aggregators, saying that digital asset treasury companies are funds, not companies. They should not be included in indices. And apparently, this is one of the catalysts for one of the big the cascading liquidations that we've seen since then. And I guess now MSCI is determining and will have a ruling by mid-January on whether or not DATs are funds or companies. But it seems like if they're decided to be funds and not companies, that has pretty bad ramifications for these companies not having access to passive flows from indices. Do you guys think there's any merit to, not the decision, but like merit to this thesis or idea?
I'm skeptical, and typically I'm here for the tinfoil hat theories, but I think in my mind the timing is most likely just coincidental. Like, I think the decision or announcement that was made wasn't even public on the 10th. So okay, who knew about it and who was moving the market based on that? And also, if you just think about it practically speaking, that would lead, you would expect that to lead to a sell-off in the public equity stocks, not necessarily the underlying, because if you just hold spot Bitcoin and you see this, or you had early information that this ruling could come, why would you be selling your spot Bitcoin? It doesn't impact you. So I don't fully follow that train of thought that it sparked that liquidation. I think there were other factors that were more specific to the crypto space and altcoins than Bitcoin specifically.
Well, even if not deliberate, the new JP Morgan product, which is bound to be products, and not just offered by JP Morgan, but others, are going to compete with some of the products that MSTR have trotted out, which are, I think interesting. But yeah, this, deliberate or not, this is, the gauntlet's been thrown. And I think my view is that we benefit from it. I think it seems that maybe that's our collective view. JP Morgan's, entry into this space, but what it means for Treasury companies, not so sure. Probably not the most encouraging development.
David, just to put you on the spot, because your friend is
here we
in,
go.
do you have any bull case to share that you would like to share on DAT companies long term?
Well, listen, I'm actually not very, I guess, smart about it, but I've never understood why. So you guys educate me. Why would MNAV be significantly lower than 1 unless there's no proof of reserves? Or I know there can be a question mark around management and so forth. But if they have the Bitcoin, wouldn't the MNAV eventually float closer to 1? It may not be 1. I mean, lots of things trade at a discount to NAV, but let's open it up to the floor. I think Michael may have some thoughts on that.
Well, I think the MNAV, I would reframe it and saying what would cause it to trade at 1 is first, because if they're just closed-end funds, everyone understands that the net asset value, it should trade at lower than that, because you have, whether it's execution risk, management fees. There was a thread that came out about missing whatever 10Q and that they can't actually hit them at the market, offerings for the next year. So that's the component of why would it trade at 1, and then let's break down. Well, these things exist. At least my fundamental thesis is they exist because Bitcoin's hard to understand. So the 60/40 is already this archaic framework for retaining purchasing power that is breaking down in real time. And so that 60 is a lot easier for people to bucket into an equity versus the underlying. But once you start to move outside of that framework, and it becomes a lot easier with proliferation of tools like multi-institution, where you can click a button and get the same security as the largest institutions, well, then it makes zero sense to offset that. That's just one angle you could tie into. Well, if Bitcoin monetizes, you may want it. So why would you buy this security-like exposure that has all this execution risk when the underlying is fundamentally better from counterparty risk to you need to use that asset? You have no claims on it. And then the overarching theme is, I think the notion of Bitcoin per share is an ultimate fallacy. It reminds me of, again, I've used this a couple of times, is like saying hours per profit at the casino. Like, everyone's up at some point, but who goes home with money is very few people. So there's very few people on insiders that make more Bitcoin because they were early and got to that trade. But along in a time horizon, everyone ends up with less Bitcoin. So the expected value or outcome is just to hold the underlying outside of that wrapper.
Well, I think you're right about the execution risk. So, and the other risks, management risk, whatever. So there would be a discount applied, and it would be probability weighted. But on the other hand, an MNAV higher than 1 could be conceivably, although again, I open it up for discussion, justified because the company in question might be able to lever it in a way that an individual can't. And B, if you have, we'll call it MSTR in your brokerage account, you can lever that in a way that you can't, at least currently, or at least easily, underlying Bitcoin. Now, as discussed on our last podcast, as I recall, like, we're all Bitcoiners. Like, we like, I think it bears mentioning that this is just an argument to be had on the margins, because I think we're all dedicated Bitcoiners. You like own your coins, stick them in a place like Onramp, as I do, etc. So this is really just kind of, I would encourage others who are listening to only think of this as sort of like a marginal discussion to even be had in the first place. This is not to replace actual Bitcoin ownership. But if we're talking about it and people are curious about it, I guess the question on the table is, isn't there an argument to be made, as with, say, forward-looking, like PE? We were talking about PE ratios earlier. The reason,
Yeah.
you're not just looking at book value and you're looking at market values, because the expected profits that may accrue to you, because in this case, the Bitcoin's levered. Okay. So Michael, what do you think?
I'll say quick
just
three
really
things,
quick,
because I know Jackson.
limited
Hold on.
to 10 seconds.
Yeah, I'll
Wait,
limit it to 10
sorry,
seconds.
guys.
So
Didn't realize we were running long. Go.
on the leverage side, VJ had a great example. If you want leverage, just take out the loan yourself, and that's already risky. On the MSTR, well, you should just use an ETF because you can leverage them, and then you just have
I
spot
know.
exposure
I
with no
totally
execution
agree with
risk.
that.
And then the last one that gets whatever, like, thrown into all of this is around people are saying they're credibly going to create some form of yield on that. And in Bitcoin 17 years, nobody's credibly made enough yield to make a difference without blowing themselves up. So you're basically saying, I'm going to go do something that's never been done. The last thing, Jackson, this is unrelated, but we have to call out. I'm going to pull it up. We did have a winner for our hat. So we were giving away one of these Onramp hats that was very exclusive. Only a few exist. And so whoever Rafa Bisuyu, if you he won the hat, so we'll reach out, or we'll, on the next comment, you can comment on the YouTube channel. Jackson's going to ship your hat because he's our de facto
Okay, perfect.
FedEx person.
All right. Before you leave, Michael, I know you have a hard stop. I'm going to put you on the spot first, but we're going to go around the horn. Michael, what are you thankful for?
I am thankful for the relationship with all of you guys, and specifically David Thayer. David's been a good friend, seen the business early on. I'll actually never forget when we first launched, he reached out and we literally sat like this. I think you were in the exact same room, and we talked about for 2.5 hours roughly, literally just Bitcoin, multi-institution custody. And he's grown to be a friend and advisor of the business. And so thankful for him, but then also you guys as well for dealing with all my shit.
There's a lot of shit to deal with. I guess I'll go next. I'm thankful that Michael put me up in this nice office to record the last trade today. But no, in all seriousness, it's a blessing to have a job where you get to have some fun, you get to have some laughs. So I do enjoy getting to do this podcast with you guys. David, I I'm appreciative of you joining for the holiday specials. I think it's always fun to catch up with you. So, yeah, thank you guys for an hour well spent. I'm grateful for that.
Very well said, Jackson. I'm also thankful for you all. The opportunity to talk about Bitcoin on a daily basis is a dream. And what I would also say is it can be easy to fixate on, especially when you're in this world and you're in this bubble, it can be easy to fixate on the price and where things are headed and why we're right and everyone else is wrong. But ultimately, what really matters is friends and family and our health. And so that is also what I'm thankful for this year.
Thanks, Brian. I echo that. And for me, it's faith, family, friendships. But it's also exciting. I mean, it sounds like a little mercenary to say it, but Bitcoin is exciting because it's not just a way to accrue wealth, but it's a way to participate in freedom, right? I mean, what a blessing it is. Unlike the internet, in which we couldn't participate, we're participating in a monetary revolution. And even though, yes, without question, faith, family, friends are the most important, it's a blessing to live in a moment in time when we get to participate in revolution.
Well
And
said.
Jackson, congrats on your recent arrival. Speaking of family,
Thank you. I appreciate that, David.
We could tell David hang out with Marty last night. A lot of revolutionary talk. You gotta appreciate it.
you're at a coffee house like the revolutionaries of old.
Awesome.
I love it.
Well, it was a great time catching up with you, David. Thank you for your time as always. We're appreciative of it.
Thanks, David.
Thanks, guys.
Thank you, guys. Really appreciate it.
Thanks for listening to this week's episode of the show. If you found the information valuable, please share the episode with a friend or leave a rating on your favorite podcast app. All the links we discussed in today's show will be in the show notes inside your podcast app. Before we finish, a quick reminder that Onramp Media is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Regardless of where you are on your Bitcoin journey, we'd love to hear from you. Visit onrampbitcoin.com/contact to schedule a consultation with one of our private client advisors.